Welcome back. You're watching The Money Show with me, Kavita Thapliyal. So when it comes to investment in fixed income spaces, Public Provident Fund or PPF continue to be preferred investment option for most Indians. So why is PPF such an attractive option for investors? What are the tax benefits associated with PPF? Can NRIs invest in PPF? Let's understand all of this with Harshvardhan Rungta, CFP Rungta Securities. Harsh, good evening and welcome to the show. So not only there's this tax benefit, but also the benefit of EEE, exempt, which is really huge for a lot of people, especially those who are scared of volatility and want safety and security when it comes to their money and the money they earn on their money. But people are aware about the basic instrument features of PPF, which is there is a lock-in for 15 years. The minimum investment amount is almost 500, that can go up to 1.5 lakh, and based on which you can get tax benefit if you are investing as per ATC. And after 15 years, the money that you earn out of it is exempt. It's totally tax-free, and the current rate of interest we know is 7.1%, which is reviewed every quarter. But let's talk about what else does PPF offer you. My first question to you is the loan that you can take on your PPF corpus, or the amount that's invested right now, even if the 10 or 15 years is not completed.
Yes, so you're right, Kavita, that PPF is indeed one of the most popular debt products that investors can have. So just to give you a before coming to your answer as to your question as to how much loan can you take, etc. So PPF was introduced in 1968, and ever since then, it has been one of the most popular debt investment that individuals could make, and primarily so, I mean, because besides the points that you mentioned, which was that the interest is tax free. It's a safety that the government of India is kind of offering you on this. One most important factor is that it cannot be attached by any court order. So if there is any debt or liability on the account holder, I mean, even if there is a court order on attachment of properties, PPF is being left out of this purview. So that makes it a little more secure in terms of the personal assets that a person can own. Now coming to liquidity, yes, it's a 15-year deposit, which can be renewed in blocks of 5 years once it is mature. Now, however, in case people need money, in case there is a need for money, there is an option to take a loan from the 3rd year to the 6th year. So if you're in the 3rd year and between the 6th year, then there is a loan facility available which you can take against your deposits. Now that loan will be subject to a maximum of 25% of the balance that you have 2 years ago. It's a little complicated stuff, but let's not get confused with those details. In principle, to say that there is a facility to take a loan, which is between the 3rd year and the 6th year. The amount that you are eligible to take loan upon is a value which is 25% maximum, subject to whatever the balance was 2 years prior. Post 6 years, you can also take partial withdrawals. You can make a partial withdrawal into this. There is some kind of liquidity that is available in the form of loan, and even in case of partial withdrawal. However, there is a limit on which you can withdraw, which is pretty less in that context to the balance that you will have in your PPF account.
What will be the rate of interest?
Okay, so if you're taking loan, the rate of interest is 1%. Okay, so the interest is 1%. However, the period until you've taken a loan, there is no interest that you're going to be paid. So effectively, whatever is the interest rate on PPF plus 1% is essentially what your cost is going to be for taking the loan.
Now, what is the duration for the repayment? Do we or that amount will be deducted from your investments per year, or however you are making in PPF?
No, so there is a payment that you have to repay it within 3 years, if I'm not mistaken. You have to repay the
months,
loan
yeah.
within 36 months. You have to repay the loan, and the interest also needs to be paid. So the 1% additional that has to be paid. So very important to note that while your loan is outstanding, you will not be paid any interest on your deposit. So that's your kind of cost that you're paying. It's interest rate that you have on your PPF account that you're earning plus 1%.
The partial withdrawals that you mentioned, Harsh, are they subjected to certain conditions?
Yes, like there is a withdrawal, like there's an eligibility for loan amount. There is a limit on the withdrawal that you can make in the form of partial withdrawal.
And that can be on specific conditions, or you can just, do you have to really mention the reason why you're doing this partial withdrawal? There has to be some kind of emergency attached to it?
No, not really. So if you have a balance in the account, you are eligible to withdraw without giving any specific reason. And it's unlike an NPS that you can withdraw only under certain circumstances. Here, there is no such restriction. Yeah, and you can just withdraw, but the eligibility of the amount is going to be very restricted in terms of the quantum out of which. So even if you have 10 lakhs in your PPF account, does not mean that you can withdraw 10 lakhs for partial withdrawal. There is a formula which makes the eligibility pretty restricted. However, there is a partial withdrawal option available.
Also, Harsh, after 15 years, if I still continue to put money in a PPF, will I still get the tax benefit? And what will be that tax-free period window available for investing then? For how many years?
Okay, so once your PPF matures, you have an option to renew it for a block of 5 years. So every 5 years, then you can continuously keep going on. So once 15 years are done, you renew the PPF account for 5 years. You don't have to remove the balance that you've already accumulated, so that you can leave it as it is. When you renew it, the entire balance continues to get the earn interest on it as per the interest rate as may be applicable on that day, in that quarter rather. And you can contribute, the same rules apply, that 500 rupees is minimum up to 1 lakh, 1.5 lakh.
Citizen invest in PPF, Harsh?
I'm sorry, I missed your question. Can you repeat your question?
Senior citizens invest in PPF? Is there any age limit or age bar? Okay.
No, there is no such age limit. In fact, there is one important category of investors who have this question, like, can NRIs invest into PPF? So, because many people, while they opened the account, they were resident Indians, and then they moved overseas to become NRIs. So there is a specific provision which says that when you open your PPF account, at that point in time, if you were a resident Indian, and then when you became an NRI, so in that case, you can continue investing into your PPF account until the 15 years get over. So on maturity, thereafter you cannot renew your PPF account because you're an NRI in the form of your residential status is NRI. However, as I said again, once you move out, your residential status changes. But when you open the account, you were a resident Indian. So you can continue depositing in that account as well. If you want to open a new PPF account being an NRI, you cannot do that.
How many PPF account can a person actually open, and do we get tax benefit for each of those accounts?
So technically, you cannot open more than one PPF. So you cannot have more than one PPF.
I mean, some people do it in the name of a minor, or people do it in the name of their wives or their spouses. Can that be done?
So each individual who's a major, so husband, wife, each individual will open their own PPF accounts. If there is a minor, then the minor has to open a PPF account under guardianship of the parent. So say, for example, the father and the child has a PPF account separately. The child has an independent PPF account. The father has an independent PPF account. Now, both accounts put together, there is a limit of 1.5 lakhs. So you cannot put 1.5 lakhs in the name of your minor child and 1.5 lakhs in your name. So both put together is 1.5 lakhs. And many people I know have been investing in the child's name of 1.5 lakhs, even in their own name 1.5 lakhs. That's not allowed technically. And the mother, father, all adults, all majors can have independent PPF accounts. And if you're investing, say the wife is a homemaker, you can still invest into the PPF account of the wife. It need not be necessary out of income generated by her or on her own income. You can invest into her PPF account. You can invest into the husband's PPF account and the minor, but whoever is the guardian in the minor's account, that guardian plus minor should have a maximum investment of 1.5 lakhs in a year.
All right. So these are all aspects which are mostly never discussed about PPF and very crucial for an investor to know about. We move on, and we have our first viewer on phone line with us, and that is Mr. N.V. Chandrasekhar from Hyderabad. Good evening, sir. How are you doing?
I am fine. Thank you.
Okay, so you have Quant mutual funds in your portfolio?
Yeah, that's right. I invested in Quant, Multicap and Absolute fund recently.
Sorry, I did not get the name.
Bigger portfolio.
I did not get the name of the Quant fund, sir. Can you repeat it, please?
Pardon?
Can you repeat?
Yeah, I have invested in this Quant mutual fund.
What are the schemes' names, sir?
The multi-asset and absolute fund.
Right. Do you have the fund's name on you? This is the fund house's name. Multi-asset is a
Quant
category.
multi-asset, one fund.
Quant
and,
multi-asset.
Quant absolute fund is another.
Quant multi-asset and
Quant absolute fund.
Quant absolute fund. Okay.
Yeah.
Okay.
No, actually, I have invested. I'm not telling you about my other bigger portfolio, but I want to know why these small mutual funds are going down nowadays. These two funds are doing very badly, and is it okay to continue in these two funds?
So this is just 6 months back you invested, right?
Yeah. Still some 8 months I've been investing in this, but they're doing very badly.
6 to 8 months. Is that what you're saying?
Yeah.
Okay. Got it.
All the other funds in the same category are doing better than these funds.
But why do you have the same category of funds in your portfolio then if you already have this category fund?
Just for diversification.
So for diversification, you should be going beyond these categories. No, I would request you to send the other portfolio, other funds also later on. But right now, let's just talk about Quant multi-asset and Quant absolute fund. Harsh.
Yeah.
Harsh.
Yeah, so Kavita, I don't have the query with me, but you are, of course, trying to get the names of the schemes. If I've understood correctly, it is Quant multi-asset and a Quant absolute fund, right?
Right, and he invested. Right, and he invested almost 6 months back. That's what he's saying, and he's unhappy with the fund's performance as compared to the peers right now.
Okay, so two things on this. One is the Quant has a very momentum kind of investment strategy. Okay, so they don't really follow the traditional long-term investment theories like a growth or a value. They're more like a momentum and timing the market kind of an investment philosophy that they have at the fund house. Now, with regards to the two schemes, both schemes by themselves are good. I don't see a reason why he should be worried about the performance in 6 months. Within their category that they're doing, the multi-asset and the absolute, both are good in their category in terms of their performance otherwise. So I think it's a little too early for him to think as to why the schemes are not doing well. It's just been 6 months. So give it time in that context. Now, coming back to the original and the first point that I made, their investment philosophy you need to understand. They're not, typically the traditional investment fund managers. So if you're not comfortable with their investment strategy, then you will need to change. If you're comfortable with the strategy and not happy with the performance right now, then you can ignore and continue with the fund.
All right. Thank you so much, Mr. Chandrasekhar, for sending us your query. We move on. And do I have my other viewer on the call with me, Aditya Khurana from New Delhi?
Yeah.
Hi, Aditya. Good evening. How are you doing?
Yeah, I'm doing good. How about you?
I'm doing good. Thank you so much. So you have Nippon Growth Fund, you have HDFC Balance Advantage, Axis Blue Chip, Axis Small Cap, Axis Nifty 50, ICICI Infrastructure, ABSL, PSU Equity Fund and Kotak Tax Saver, right?
Yeah, that's correct.
And your investment time horizon is?
I don't have a time horizon, so it's a long-term thing.
Okay. You just got this portfolio done for yourself?
Yeah. Actually, I had help from my father, but I just wanted to know if it's strong enough to, create wealth in the long term.
Okay. Since it's not tied to any goal, Harsh, how would you like to analyze these funds?
Okay, so apparently, Kavita, I'm just trying to get up to speed to note down the schemes that he has with him. So it's Nippon Growth, HDFC Balance Advantage, Axis Blue Chip, Kotak Tax, ABSL, PSU. That's the names I could gather. So, one very clearly not having a time horizon will only try and give you, we don't really know where are we heading towards. Now, if you require this money in the short term, then of course the portfolio is going to be very different. Now, assuming a fact that the investments are going to be over long term, okay, that's the first part. Only then can you take a view on equity because he has an Axis Blue Chip, he has ABSL, PSU, Kotak Tax Saver. So these are pure equity, Nippon Growth. So these are all pure equity funds. So the minimum time horizon that he will need to keep with himself is between 8 to 10 years at least. Now, if that is the case, then of course the investments can be made into equity. Now, asset allocation point of view, I can say that you have 80% kind of investment into pure equity funds and 20% would go into debt. But debt would include some portion of debt allocation in the HDFC Balance Advantage Fund as well. So your Axis Nifty 50, ICICI Infra Fund, Axis Small Cap, these are very, very aggressive equity funds. So Aditya, you need to be very clear as to what is the minimum time horizon. You may not have exactly how long can you be invested, but at least have a view as to what is the minimum time horizon that you can stay invested. If it's 8 years from now or 10 years from now, then equity allocation is fine. I think you should re-send the query again to us post having some clarity on how much is the minimum time horizon that you can stay invested. Second element, you really have a lot of schemes in your portfolio. You really don't need so many schemes in the name of diversification. You have a sector fund, you have a PSU fund, you have a small cap, large cap, and in the large cap, you have an Axis Blue Chip and Nifty 50 again. You need to consolidate. You don't need both of these schemes in the large cap. You can just have a Nifty 50 and that is good enough to have representation of the large cap. So I think you'll need to do a total rework and probably come back again with your query with little more specifics as to what you're looking at, how you want the asset allocation. Because if you give me that information, then probably we can design something for you.
There on the phone line with me, do you want to ask Harsh anything?
Okay. So, if my minimum time horizon is if I say 10 to 15 years, so how can that be analyzed?
Okay.
Yeah. So no, that is a good point that you made, Aditya. So if you're saying 10 to 15 years, then I would say about 80% of whatever you're investing every month. So you have 5,800, I can see 5,300, 3,200. I really don't know how you got these amounts also. Usually we see investments which are in round figures. I mean, it could be either 6,000 or 5,000 or 3,000. But nevertheless, whatever be the reason, it's not that you cannot do it. Your total monthly investment, take about 80% of them and park it into pure equity funds. Now, within the pure equity funds, if I can give you some recommendations right now, Nifty 50, Axis Nifty 50 that you have with you, invest about 30% into that of the total investment that I'm talking about. You can continue with Nippon Growth, Axis ABSL PSU, and Kotak Tax Saver, because these are what you already you need a tax benefit under Section 80C. So you can continue with Kotak Tax Saver. On the 20%, you can just invest into the HDFC Balance Advantage Fund. So I think this will consolidate your portfolio into about 5 schemes, and that should be good to go.
All right, that's all. Aditya, all the best with your investment portfolio. Harsh, we move on to our next question, which is from Srinivas Kadiyala. And Harsh, the question is on HDFC Multicap Fund, and he wants to know that can he start his SIP in this fund, and is Multicap a good category for him?
Yeah, so coming to the multi-cap category first, Kavita. So what does a multi-cap category do? So as per the mandate, they are supposed to invest 25% of their corpus in all three segments, market segments. So you'll have a 25% allocation to large cap, you'll have a 25% to mid cap, and 25% to small cap. So that is a mandatory allocation that has to be done. The balance 25% can be invested into any of the three categories, however the fund manager feels comfortable investing with, and wherever they find opportunities. So with regards to multi-cap category, it's a good category to be into. You get representation across the market segment. Now, with regards to HDFC multi-cap, so HDFC as a fund house is one of the top performing fund houses overall. So I'm not talking about only one scheme. I'm talking about the assets that they manage, equity assets. As a whole, their performance is definitely above the category, above the mutual fund industry average. So it speaks a lot about the fund manager. So most certainly you can trust upon this scheme in terms of the multi-cap as a structure and the fund house, which is HDFC, and you can most certainly start investing into that.
I think that will be all for today. Thank you so much, Harsh, for being on the show and helping our viewers with their financial portfolio queries. And on that note, it's time to sign off, but I'm going to leave you with our WhatsApp number and email ID where you can reach us and send us your portfolio-related queries. The email ID is themoneyshow@etnow.tv and the WhatsApp number is 8657974571. Thank you so much for watching. Goodbye.